But all right, Q, what do you say we get things started?
All right, let's ride. Let's go.
All right. Okay, everybody. So, what I like to get started with here is just our platform layout in general. So, right now, what you're seeing on your screen, this is going to be our downloadable desktop platform. In terms of navigation, we have three main points here. First is the panel off to the left side of our page. This is going to be our watch list and recent symbols section. Now, this left side panel, this is something that will stay on your platform at all times. So it makes things very easy when you're trying to jump from different symbols. You could simply just click on one from your watch list here, and it will pull that symbol up across the top of the platform here, which leads us to our next point. That's going to be the top of the platform here in our active symbol area, right up here. So this is where you can see any active symbol that you have pulled up. You can also search for a particular symbol. You could see the quotes here, the bid, the ask, see the change for the day. Then you have some other information up here as well. Of course, like your account net lick value, your profit and loss, and then your current option and stock buying power. And the final section here that I wanted to go over is going to be our right side panel here. So if you're on the desktop platform, you don't have this right side panel out or you're not currently using it, I would say definitely give it a try because it speeds things up significantly in terms of how efficient you can be on the platform when it comes to closing out of trades, queuing up different orders, seeing what how different trades are doing for you. So to access that right side panel, you'll want to click on this arrow here in the upper right corner of the page. This will pull out our right side panel. And then from here, we have a couple different tabs like our overview. So this will give you a mini chart of the symbol that you're currently viewing, our analysis tab. So if you're someone who's looking to analyze a profit and loss graph of any trades that you have on, this is what you would use the analysis tab for. We could touch more on that later. And then just a couple other things here in the right side panel. You get a little breakdown of your activity. You also get a nice link here to Tasty Live, so you can see what's currently airing there on the show, among a few other options there, which we may touch on later on here. But okay, everybody, let's go ahead and get into the meat and potatoes of this demo, which is going to be selling puts and doing cash secured puts in your tastytrade trading account. So first things first, how do we search for a particular symbol that we want to sell a put on? Well, that's a scenario where we would use our active symbol area near the top of the platform. You'll see right up here, you can go ahead and click into this box and it will give you the option to type in a symbol. Right now, we're going to use NVIDIA, NVDA, or you could also type in the full name of the company if you're not sure of the ticker itself. So we'll go ahead and type in NVIDIA, click on it. So you can see it's now in our active symbol area. And then to pull up our options chain, we'll go ahead now and click on the trade tab here off to the left side. From the trade tab to see the traditional options chain, you'll want to make sure that you are in the table trading mode. So we currently are not. Let's go ahead and get there. So we'll click on table. And just like that, now you'll see a bunch of different expirations populate here. If you're trying to follow along and you're not seeing as many expirations as what is shown on my screen right now, you may want to give this little funnel icon off to the right side a quick little look, because you may only have like monthly expirations, which would be listed under regular expirations, or non-regular being the weeklies. So if you want to see everything, just make sure you have all selected.
I've made that mistake a time or two. So
Yeah,
don't worry.
me too. Me too. Especially when you're on a call with a client, that's always an interesting conversation there when you're telling them you can't see the expiration, but then clearly it's there. You just have your filters set the wrong way. So I've made that mistake on the phone a few times. So if it happens to you, don't feel too bad. But okay, so now that we've got our expirations pulled up here, we were given the April 17th 2025 expiration a look here, and maybe looking to sell a put on that expiration. So if you're someone who bases it off of a particular expiration date, or if you're just looking at days until expiration, you could give this column down the center of your screen a look here, because it will give you the days until expiration there. So the April 17th, that's the 36th day. So we'll go ahead and click into that section there. Now, from this page, we're presented with a lot of information here. So first and foremost, down the center of the screen, this is where you'll see all your strike prices listed. To the left of those strikes, you'll see the calls listed. And then to the right of those strikes is where the puts are listed. So if we're looking to sell a put here, we'll be focusing on the right half of this page. And right now, going through, let's see. So Nvidia, their expected move looks to be about $14.08 to the upside or the downside here for the April 17th expiration. That can be seen in the upper right corner of the page here. So as we're going through and trying to find strike that we'd like to sell, I think Quentin and I were discussing a little bit before the demo. We both settled on the 90 strike here just for easy math. So we'll go ahead and queue up an order here to sell the 90 strike put. In order to do that now, you need to click on the bid price of the put. So right here, it's $1.03. We'll go ahead and click on that. And now you'll see that a red box appears around that strike, indicating that we're selling. You can also confirm your order by taking a look in the bottom left corner of your screen here, where we're selling to open one of the April 17th 90 strike puts. Then also toward the bottom of this order ticket, you have quite a few other options here. So you can adjust your limit price. If you're looking to do a limit order on this, you can adjust that here. You can also set your particular order type. If you didn't want to do a limit order and just wanted to get in at market, you could go ahead and adjust your order type here from limit to market simply by clicking on that drop-down box there. And you can just select market. But for this one, we'll keep it at a limit order right now. And then lastly, one big thing that I like to point out, especially to newer clients, if you ever have a hard time getting your orders filled, one thing you want to take a look at is going to be this price bar at the bottom of the page here, where we see a few different prices. We have our mid price, which is in the center here at $1.06. Then off to the left side, we have our natural price, which looks like the market move. So that's also at $1.06 now. But if you're
Nice tight
trading
markets
things,
on Nvidia.
yeah, if you're trading things with wider spreads, this price bar here at the bottom is going to be your best friend. But now that we've got this order queued up, I'm going to turn things over to Quentin here, and he's going to take you through the different buying power requirements when selling these puts. So Quentin, go ahead and take it away.
Yeah, of course. So today we're working in a margin account. That's the example account that we have pulled up here. And so that's why you see the BP effect is around $2,050. And so if you're doing this in a cash account, the buying power effect will be much greater. It will actually be equal to the max loss because that means it is a cash secured put. And so if you don't have $8,800 just lying around in your cash account, then we'll pull up something different as well. Let's show a lower priced underlying so you can do an example. So we can do an example trade for you in that. But so let's say you have a margin account like we do here. You'd only need around $2,050 to be able to place this trade. And so what a cash secured or short put is saying is that you're willing to buy that security at the given strike price. And so to take on that risk, you get paid a certain premium, which in this case is around $1. And so when doing the simple math, our break even would be 90 minus 1 for the $1 premium that we're receiving. And so if we do happen to buy the shares, it's more like our break even price is really $89. And so when you sell that 90 strike put, you would be willing to buy the shares at a price of 90 or anything lower. If it goes lower than that, you're still buying the shares at a strike price of 90. And so just to talk about some real world examples of what selling a put is like, I like to use two specific examples. One of the things I like to talk about is buying a house if it goes below a certain price. So let's say there's a given house that's around $150,000 and you're saying, "Hey, I don't want to buy it at 150,000, but I will buy it at 100,000 even if it goes below that on a certain date." In this case, our strike or our expiration date is April 17th. And so by April 17th, I would be willing to buy this house at $100,000 if it goes below that. And so when you're taking that risk, saying you're willing to buy the house at that price, you get paid a premium For example, in this case, we're willing to buy Nvidia. If it goes to $90 or below, we're willing to buy it at $90, and we get paid a premium to take on that risk because there is the risk that, let's say, it goes to something like $40, we would still have to buy it at $90. But as long as it stays above $90, the put would expire worthless, and then you would get to keep your $1 that you made by taking in that premium. And then another example I like to give is like it's selling insurance. And so a lot of people, to protect their stock, they will buy puts, and that can get expensive. So if you think it can get expensive to buy puts to protect your stock, you can also sell them. And then you're collecting that insurance premium that people are paying and willing to use to protect their stock. And so those are some of the examples I like to give. And so in this case, just to reiterate, we'd be willing to buy Nvidia at a price of $90, but if it expires worthless and Nvidia stays above $90 by April 17th, then you get to keep that $1 in premium that you were paid to sell this option and take that risk.
Yeah, and I just looking in the chat here, I see a couple questions regarding like the buying power effect. So Quentin did touch on that briefly there. The reason it's so low here is because we do have this order queued up in a margin account right now, so you're getting that relief in terms of buying power. But if you wanted to make sure, like in the event maybe you were assigned on this option, is it still cash secured? Like if you got assigned, are you going to be charged margin interest? One thing you'll want to check for that is actually going to be in the balances tab here at the top of your page. So if you were to go ahead and click on this balances tab, you can see here our current cash balance in the account. Whoops, let me get that pulled back up here for everybody. My apologies. You can see here in the balances tab, the cash balance at the top of the page is $30,852.49. So in the event we did get assigned on this 90 strike put on Nvidia, we'd own 100 shares of Nvidia at a price of $90 per share. So you do 100 times 90 comes out to about $9,000 there. So in this case, we would still be cash secured. You wouldn't be getting charged margin interest because we do have enough cash to cover those shares in the event we were to get assigned.
Yeah, and then with the leftover buying power, because you do get leverage, there's not margin when you sell to open the option because it actually increases the cash balance in the account. So before assignment, there wouldn't be any sort of margin charged for putting on this trade. You would need a margin account in order to be able to get the relief and not have the put be cash secured. But you don't need to actually like borrow from tastytrade to have this position on. And then with the remaining cash, you can put on other positions, do what you will, or use something like treasury bills or treasury ETFs to equal cash. And then so Anthony, you wanna send this trade through? See what we
Yeah,
got
we'll
here?
we'll go ahead and send it through in just a second. Just because I did see another question here about how we added the delta column. So sorry about that, everybody. I should have touched on that before. We got this trade queued up, but these columns here at the top of your trade table, you'll notice there's a few that are going to be static. So that's the bid and the ask. Those will always be there. Outside of that, these columns with these headers here with the little circular icon next to them, those are customizable. So you can add different things there in those columns. So that's all I did was just clicked on this header here. A range of different options appears. If you wanted to see the delta, you could go ahead and just select delta from the menu here. Or like right now we have volume selected here. Maybe instead we wanted to see open interest. You could also select open interest from that menu. So just because I saw a question, just wanted to go ahead and touch on that briefly. But yeah, like you said, Q, let's go ahead and get this one fired off here. So now that we've got our order queued up, we have it here. Right now we've got it at the natural of $1.03. We'll just send it there just to make sure it fills. So we'll go ahead and hit review and send in our bottom right corner of our screen. From here, we're taken to the review page where different things are shown, such as like the estimated trade cost, as well as the commissions and fees that you'll be paying. So it's $1 to open per contract, $0 to close. And there's also a small fee associated with this contract, which is 14 cents. So in all, you're paying about $1.14 in commissions and fees for this position. So we'll go ahead and send that order now. All right, we've got that in there working. Looks like the market moved against us. So let's go ahead and work this order. So on the right side of our page, we can see this little yellow W icon. Just simply right click on that, and then you can go ahead and choose replace order to change your order. Just so we get filled, why don't we go ahead and just do this at market right now? So we'll adjust our order type to market, review and send that order off. And just like that, you'll notice we got filled on that put, which can be seen in the upper left corner of our screen here now.
And then Anthony, can you pull up the Analyze tab for me?
Yeah, absolutely. Absolutely. So this is what we touched on briefly at the beginning of the demo. This is where you're going to be able to analyze the profit and loss of a position that you currently have on. So we just put that NVIDIA position on. If we wanted to analyze the profit and loss zones here, we'll go ahead and from the positions tab, we'll go ahead and right click on our 90 strike put, choose analysis. And just like that, we are in our analysis tab.
Yeah, and then so what this will show the break evens and the profit and loss graph for your short put. And then also you can see this exact same thing before the put is on. You'll just see it in the exact same way. It'll just show that it's working. So Anthony, can you zoom in a little bit so that that green's a little bit bigger there?
There we
And then
go.
so this will show the profit and loss graph of what the position is shown before it becomes stock. Like if you get assigned, if you just have the put on, as long as it stays above that 90 strike before expiration, then you'll receive max profit of approximately $1.01. So $101 in actual cash. And then if it goes below that, it will show at each price what it would be, what your loss would be when you go below that 90 strike put, or really 89, because 89 is the break even. But when you keep going beyond that 89 strike price, or not necessarily strike price, but just price in general for NVIDIA, that would be your given loss.
Yep. And then you can see that here as well as you're moving the cursor side to side on your graph. We have this little information box here at the top. So just as Quentin mentioned, as we pull it to the left here, right at about the $90 price, you could see our P&L at expiration is $101, which is the total premium that we collected to sell this. And as we move this further and further left, you could see that profit number is decreasing. And then past that 89 strike, we are now at a loss upon expiration if the price of NVIDIA is trading less than $89 per share come the expiration of this option.
And then so Anthony, you want to pull up a lower price underlying we'll go over is HPE Hewlett Packard. And
Yep.
so this would show what you could do in a cash account unless, you know, you have the funds to trade Nvidia as a cash secured put, that's fine as well. And then or we could do something like Hewlett Packard, which is a lower priced underlying. And then also just to talk about the strategy as well of a short put, it's typically good in times like this right now, not that there's a trade recommendation or anything, but when there's higher volatility, it becomes more expensive to buy puts. So it becomes more profitable when you sell them. So you're able to get further from the strike price and receive, or further from the stock price and receive the same credit versus like if you're the same distance from this stock price and you're able to get a bigger credit than you would in lower volatility environments. So we happen to catch good timing with this demo in a higher volatility market right now. If you're thinking maybe I don't want to, you know, buy 100 shares outright, but if it keeps falling more, I would be willing to buy, you know, Nvidia at something like a price of 90 if it keeps falling more. And if not, you know, I get that dollar for taking on the risk and taking in that premium. But if you want to stay a little bit more conservative with your investment, you would be able to sell an out of the money short put, and that would benefit from the high volatility as it goes and decays back to normal.
Yep. And then just as Quentin mentioned there as well, selling cash secured puts on NVIDIA can be quite expensive. Me personally, I don't have $9,000 in a cash account that I'm able to sell a cash secured put on NVIDIA. So if you're in the same boat as me, something like Hewlett Packard, for example, or any lower priced underlying, now, again, no trade recommendation here. But if there's a certain lower price underlying that you happen to like and you'd be interested in maybe selling some cash secured puts on it, go ahead and check the options chain, see if there's options available, because chances are you can probably sell puts on that underlying as well, which won't cost you nearly as much. So, for example, here with Hewlett Packard, we went same expiration, April 17th, 2025. That's 36-day expiration. If we wanted to look at something, maybe the $14 strike. Q, do you agree? You good with that? Selling the 14 strike?
Here, wait, can we go to the 15? Because I have like an interesting
Yeah,
observation.
absolutely.
So,
Absolutely.
because if you go to the 15 strike, let's say we collect 75 cents. If by April 17th, that's the expiration run, yeah, April 17th, if the stock doesn't go up more than 75 cents, it was more beneficial to actually sell the put rather than own the stock. Because if it goes above 75 cents, like if Hewlett Packard goes to like $17, then it would have been more beneficial to buy the stock. But if you don't think, it's going to go up that much, where like the expected move is, and so if you think it's going to stay within that expected move, but you still are like bullish Hewlett Packard, you can collect that 75 cents and then you wouldn't have to worry about it necessarily shooting to the moon right after because you already collected that premium and then you could get long the stock at a lower price than it is now. Or you could just keep the premium, let's say it stays where it is, then you made, 75 cents rather than making zero. So these are just some of the different trade-offs when buying stock versus selling a put.
Yep. And then, like Quentin mentioned there, with the expected move, you could see that in a couple different places here on the platform. So, first and foremost, would be in the upper right corner here. Looks like for the April 17th expiration, it's about $1.39. Another place you could see it is on the strike price column itself. It's this orangey brown, kind of opaque colored uh, line here.
The
That's
orange
that
bar.
orange bar. Yeah, whatever color you want to call it. Orange bar we'll go with. That indicates the expected move for that particular expiration as well. So you could see that in two different places: upper right corner where the expiration is, and then also on the strike prices themselves.
Yeah, and so do you will with that information. But if you think that, in this example, Hewlett Packard is going to stay, below the expected move, but still to the upside, it might be more beneficial to sell the cash secured put rather than buying the stock. I mean, there's different benefits and, in buying a stock and stuff like that, which we've gone over, but you'd be able to sell a put, especially in, a high IV environment. That expected move is elevated. So you would be collecting a greater credit because of the implied volatility. And so, Anthony, you wanna ship this off here?
Yeah, I'm actually going to ship it off here from the curve mode here, Q, because I did
Nice.
see a question about how we can adjust the strike prices from the
Nice.
curve mode. So if you go ahead when you have the order queued up, let's go ahead and change our trade mode here over to curve. So now you can still see that profit and loss graph, but there's an additional piece of information here, which is going to be this red flag here, which indicates the put that we're selling. So you can also adjust this directly from the curve analysis mode itself. If you were to left click and hold on this red flag or green flag if you're buying, but again, this is a put or a demo on how to sell puts, so that's why it's going to be red here for us. If you're looking to adjust this, all you need to do is click and hold, and then drag either left or right, depending on if you're looking to go higher or sell a higher strike or a lower strike. And you'll see how your profit and loss graph changes with that adjustment. So if we were to sell like the 14 strike put, you could see our profit and loss graph changes significantly. So if you're someone who's interested in using this mode, you can easily and quickly adjust the strikes that you're looking to sell directly from this graph as well.
And then
But
I
yeah,
also saw a quick question about IV rank versus IV index. So your IVX, like which is the IV index, that's the implied volatility for that expiration. But the reason we created the IV rank was to see, like with the VIX, a lot of people typically know what the VIX is trading around, so you don't need to look at a rank to see like what's high and what's low. But for Hewlett Packard, for example, I have no clue what Hewlett Packard's normal volatility is. And so what we do with IV rank, we rank each one of those volatilities. And so right now, the current implied volatility index is at a rank from 1 to 100 of around 56. And so that would show that it's higher than average volatility. And then when it's something like 56, the IVX could be anything, but compared to itself, it's a higher implied volatility. So that's why we use the IV rank versus IV index, just because we don't know what to compare it to when using IV index. But when you're looking at an IV rank, it's comparing the current implied volatility to itself historically. And so, sorry for that little interruption there, Anthony.
No,
Go ahead.
all good information, all good information. So now that we've got our trade queued up here from the curve analysis mode, we can actually just send it directly from here. You'll notice we have our trade ticket at the bottom of the screen still. We can review our max profit, max loss numbers, as well as the buying power effect. Again, our buying power effect is so low right now because we are doing this in a margin account. But if you were doing this in a cash account, actually your buying power effect would be equal here to whatever our max loss number is. Because essentially, again, all we're doing is taking the strike price that we're selling, the number of contracts that we're selling, and then we're multiplying that by 100. So we're selling one here. So all we're doing is taking 15 times 100, comes out to $1,500. And then we're deducting the premium that we receive for this. So say we get 75 cents, you're going to have to put up about $1,425 in a cash account to sell this put, which for most people, it's probably a little bit more reasonable than selling a cash secured put on NVIDIA for $9,000. But without further ado, yep, we could go ahead and send this now. So we'll go ahead and hit review and send. Again, we're taken to the review page. We can review commissions and fees that are charged here as well, and then the estimated trade cost, your buying power effect. Once you've reviewed that, you could go ahead and hit send order. And then you'll notice we got filled on that order here in the upper left corner of your screen. You can confirm that fill. You can also see it from the positions page here. So if you click this tab here, back to our positions page, you'll see now we have positions in both NVIDIA and Hewlett Packard from our positions page here.
All right, Anthony. And then before you get murdered by Scott, do you want to show how to do some closing positions here? Or potentially, wait, do you want to show how to do a roll on here as well?
Yeah, definitely. Definitely. We could go through a roll. But I did just want to, because I seen the question come up quite a bit, and I see some people asking about like more information on the curve analysis mode. We may touch on a couple of those things later, but for this demo, we do want to keep it strictly like selling puts,
And we've
cash
got some
secured puts. We
phenomenal
do
demos,
have, yeah, we do have
demos on the
some
analysis tab.
recordings. So David here, if you could just please go ahead and drop that in the chat. I think he already did. So if anybody's interested, check out our YouTube channel. You could find more information on the curve analysis mode. And then I also saw a question. Somebody was asking about selling puts on SPX. For naked puts, that is very expensive to do. That's you're getting close to about $100,000 per contract. So just a heads up there. We fortunately won't be showing any examples on SPX. They're quite expensive to sell naked puts there. But yeah, let's go ahead and roll some of these positions here. Q, what do you think? NVIDIA?
Yeah, let's try NVIDIA.
Okay, so to queue up a rolling order now for NVIDIA, you could do that directly from your positions tab. Easiest way, in my opinion, would be by right-clicking on the position here, and you'll notice you get this little box that appears, and you get a couple different options to do, like a quick roll. You could roll just the expiration, or you could roll the strikes up or down. What are you thinking for this one, Q? Maybe roll the
I'm
expirations
thinking
out?
all expirations to the 65 day.
Okay. Yep. So if you wanted to roll expirations and we wanted to take this from the April 17th, which is the 36-day put, we want to take it now to the 65-day put. We
Yeah,
can
one more
quickly
month.
do that. Yep. We could quickly do that by clicking roll expirations and then select the 65-day here. Now that we've got that lined up, we'll go back to, let's actually go back to our table mode for this one. So now that we've got that lined up, you can confirm that in the bottom left corner of your screen. You'll see we're closing the April 17th and then opening the May 16th, both the 90 strike puts there. So all we're doing here, leaving the strike the same, we're just taking the expiration further out. It looks like right now we may be able to do this for pretty decent amount of credit here. Looks like we could roll this
Yeah,
for,
collect almost another $1.
yeah, maybe an 87-cent credit. We'll see. So we'll go ahead and fire this order off now. Up mids at 88. We'll try there. Why not? So we'll go ahead and send this off. And just like that, we've rolled our position. Now that we've rolled it, there's a couple different ways that you can actually track this roll. One of my favorite features, I don't know about you, Q, but one of my favorite
Oh
features on
yeah.
our
Oh
platform
yeah.
is definitely going to be the order chains feature. So if you haven't familiarized yourself with the order chains feature yet, and you're someone who's rolling positions or does a decent amount of rolling, you're tracking this all on your own on a spreadsheet. The order chains feature pretty much takes away the need for you to manually track it yourself. So to access that order chains feature here, we can go ahead and click on our right side tab. We'll pop that out. And then from the right sidebar here, we're going to click on this little icon here near the bottom of the page. So this is our order chains feature. And then right here, this is where we can see all of our recent orders that we've opened on NVIDIA. Q, I don't know if you wanted to add a little bit more about this order chains tab here.
Yeah, so order chains is great. It really helps you like track your rolls if you roll a lot of positions. And let's say you don't want to buy the stock, but you still want to stay in a short put and it's in the money near expiration. So what you can do is like we just did here, buy back that first put that you already sold and then sell one in the next expiration or choose whatever expiration you would like. And then you would be able to roll that out. Margin requirements shouldn't change. And then you should still have that position on and you wouldn't need to put up all the money for the stock. That's one benefit. And then two, you would still be collecting that premium and have the different Greeks at play to your advantage, hopefully. And then you get to stay in the trade for a longer duration. And then the order chains is so great because it tracks that average trade price for you. Like it'll take that $1 that we originally collected and then add the 87 cents to it. So now your average trade price is $1.87 rather than, that $1 and having to do the math on your own, like on some other platforms. This is a great feature that we have to where it just adds it up for you. And you could say, hey, what's my average trade price? What is actually my profit and loss on this position? Rather than having to do some back of the envelope math and stuff like that. Especially like, I mean, I've seen options where it's like, 80 rolls or
Oh
something
yeah,
like that. So, I mean, but even if you're just doing three rolls, it's super
it's
beneficial. Let's
hard
say
to
you want to
track.
stay in it for the first quarter of the year or something like that, and you're rolling it each month. It's much easier to just keep track of it this way than have to, write down on your little notepad. Like my dad used to do this. He'd write down this little notepad next to his desk and like, okay, this is my roll for this stock. And now you don't have to do that anymore. Your notepad's right there on the
Yeah.
screen. And so super, super beneficial feature.
Yeah, order chains is awesome. Another great thing about the order chains I like is the market state snapshots as well. So if you're ever going through and like reviewing your trades and you're like, man, why did I roll this? Or what was this underlying trading like at the time I decided to roll
This is
this?
great.
Well, you can actually see this from the market state snapshots here in the order chains. To pull those up now, just simply pull up the order chains and then right click anywhere inside the chain. You get this little option to view market state snapshots. Click on that and it provides you with a little bit more information. So right now, we have it set to underlying price. So we can see what NVIDIA was trading at the time we made the adjustments to this position. So the first one here, if we highlight or put our cursor up here, you'll notice that it occurred this was the opening trade. We opened it this morning. NVIDIA was trading at 116.31. And then when we just rolled it there a couple minutes ago, see it here now, occurred at 12:04. NVIDIA was trading at 115.71. So you can go back and review this among a couple other things as well. Right now we have underlying last price set, but you can also review like IV rank, IV index, delta, theta as well, all from the market state snapshot.
Yeah, I love this too because if you want to see, now have to go to the chart, squint and look at it, look at the correct candle for what you did. If you want to get it down to the minute, you got to change it to the minutely chart and then look at the boxes like this. If you don't want to do any of that, hey, if you want to do that, go for it. But if you don't want to do that, you could just look at the market state snapshots as well to see what the price was of the security when you place the trade.
Right. And then just Griffin, I like your comment here, saves brain cells and pencils.
Yeah.
And then DJ here, when you roll and close, don't you pay for premium? Where does it show? Well, not necessarily. You're
I
not
mean, typically when rolling like short naked options, if you're
right.
rolling to the same strike, and I mean, even sometimes you can go like down in strike as well and still collect a credit. But if you're rolling to the same strike, you should pretty much, in at least 99% of scenarios, always be collecting a credit when it's just a short naked option. If it's a spread, that's a bit of a different scenario if it's in the money. But if it's a short put, like in this case, whether it's in the money, out of the money, when rolling it to a further expiration, you should typically be collecting a credit.
Yep. Yep. And then Dean here. So with the average trade price, so we just have one contract here. So the math on this should just be a little bit more straightforward. You don't need to divide by two. We're just looking
Yeah,
at the total amount of premium collected. So that's why we're just adding the credits up.
Dean, so I get what you're saying with like the dividing by two because there's two trades. The reason we wouldn't divide by two because there's still only one contract and we're buying to close that original contract and selling to open the new one. So it's still one trade overall and you're adding to that premium. And so when collecting that premium, it adds to your trade price. And so the average trade price, there's an average trade price per contract, but we only have one contract. So that's why you wouldn't need to divide by two. Let's say we had like 10 contracts, it would still show that $1.88 trade price. If we had five contracts, it would also still show that $1.88 trade price. But I see what you're saying. It doesn't divide because we only have one contract.
Yep. And then as well, when you start changing like the generally for the most part, like when people are rolling, I would say what I see, the quantity is staying the same, but that's where that average trade price might start to get a little funky. Like if you go from a quantity of 10, now you're rolling and you're rolling five of those and closing the other five. That's when the average trade price starts to get a little funky and a little more difficult to calculate. But as long as you're keeping the quantity the same, it should do all the work for you there.
Yeah, I mean, even if you are doing different quantities, system will still do it for you. It just might not make as much intuitive
As much,
sense, right?
yeah,
Yeah.
exactly, exactly.
All right, and Anthony, you want to close this bad boy up here?
Yeah, we'll go ahead and show you all how to close out of these positions now that we've put them on, and then I think we'll open things up to a little Q&A here. I know we're getting close to the end of the demo here, so if there's any questions or anything that we didn't touch on relating to selling puts, please go ahead and feel free to drop those in the chat now. But as far as a closing order goes, you could do that from a couple different places. The most popular, I would say, would be from the positions tab. In order to close out of a position, very similar to how we rolled it, you just need to right click on that position and then choose close position here from the top of the page. So for our NVIDIA put, we'll go ahead and close this out right now. Looks like we're going to have about a $4 or $5 loss. So wish we could have made some money, but it is what it is.
Hey, if
So
Anthony's not here next demo, you guys know why.
so we'll go ahead and close this one out now. We'll go ahead and route that at the natural price of $1.91. So we'll go ahead and hit review and send that order off. And just like that, we've closed out of the position. You can confirm this for yourself from the positions tab as well. You can see right now our NVIDIA position. Those options are listed there, but both quantities are set to 0, which indicates we are now flat.
Yeah, and if you see them there and it's like, why are they still there? It's just because the position filters at the top, like where it says stocks, options, futures, fixed income, working, and close. It's just because you have that closed one highlighted. If you unhighlight it, it'll go away and it'll just show the different closed positions for that day of trading.
Do that. So we remove that closed filter there, and NVIDIA has disappeared completely. But if you did want to still see those closed positions, you could keep that on. Or if you don't really care, just go ahead and uncheck that, and it will disappear completely. But all right, everybody, I think yeah, we're probably going to get things wrapped up here in a couple of minutes. Are there any additional questions? Anything you guys want us to go over again? Happy to do so.
Yeah, so I see a question here like, what if NVIDIA drops to 80 and you still roll? If you're rolling just the naked put, you should still collect a credit as long as you're still rolling to that same 90 strike. It's then if you're moving it down a strike that you may pay a debit, which is completely fine. It's just a different type of trade. But if you're looking to always collect a credit, you should always be able to do so at the same strike price.
Yep. And then there's a question here about would a roll of a spread be handled exactly the same as what you showed? So spreads, you can absolutely roll them, it would still track it in the order chains. With those, it depends on how many legs you have for the spread, because the max amount of legs you can have on an order is four, meaning that if you're trading vertical spreads, you can roll that. You can roll both legs on one order. But with something like an iron condor or a butterfly, you're going to have to do two separate orders to roll that entire position out.
And then I see a question here. Uh, if you have an open limit order, where can you see the status of an order? So, Anthony, if you want to put a closing trade in here just below the market, and then
Yep.
we can go to the activity tab as well to see how you can change that order from there.
Yep, absolutely. So we see we have the working order here. This can be done from, like Quentin mentioned, a couple different places, either the positions tab or the activity tab here. So from the activity tab, just make sure you have your working filter selected here at the top of the page. So all working orders will show. And then with that working order, to adjust it, all you need to do is just right click, and then you can either cancel the working order completely or you can replace it if you're trying to change the price. So, for example, if we wanted to bump this price up to 75 cents and now send that, you'll see our first order at 70 was canceled. It's now working at 75. So that's going to be the best way to adjust those working orders.
Hey, and that's us right there on the bid. That's 75. That's us.
Yep.
And then,
uh,
so I see a question about margin interest. The only time margin interest ever gets charged is if that settled cash number in the balance tab goes negative. So even when the cash is negative, it's not until the position is settled. You get charged margin interest from settlement to settlement. And so it's whenever that settled cash balance goes negative that you'd be borrowing from tastytrade and then charge margin interest based on that.
yep. So it's
And
this
then
number
also,
here.
Anthony, could you
Yep.
go over the market state snapshots again? Someone was wondering where you can see the
Oh,
snapshot of the
yeah.
trade, as well as just like showing the different prices.
Absolutely. So that's going to be from our right side panel here. Go ahead and pop that out. And we'll go ahead and use NVIDIA again. This is our trade that we just completed there on NVIDIA. So to gain access to those market state snapshots, just right click anywhere in the order chain for the chain that is specific chain that you're trying to view, and then click on view market state snapshots. And then from here, this is where you can see everything plotted out for you, what the price of the underlying was trading at when you opened it, where it was trading at when you decided to roll, or if you wanted to see the IV rank, how that changed. So here was IV rank when we opened the position, when we rolled it, and then when we eventually closed it out a couple of minutes later. All three of those are plotted there as well, among a couple other things like IV index, delta, and theta can all be seen from the market state snapshots too.
Yeah, all right. And then I think that's it from us. If you guys have any other questions, please drop them in the chat. We can stay around for another 5-ish minutes and answer those. But from now, from me and Anthony here in the Tasty Verse, we thank you all for joining us on this selling puts and cash secured puts demo.
Yep, absolutely. Thank you all for coming out today. Have a great rest of your day.